All right, guys, what's going on? It's Sunday morning. So this is a part two from yesterday. If you haven't watched part one, just go back in my videos, just click my name, go back in my videos. Part one was 11 minutes long. It explains this whole side of the board. So if you haven't watched that part, I'd recommend just pausing this, going to that one, and then watching this one. So so let's start off here. So yeah, I was talking about fear, how it's very, you want to really buy when there's max fear, which I think there is max fear in the market right now. So this is a great time to buy if you're a long-term investor. I don't day trade or swing trade. So if you're doing that kind of trading, this is not the right channel for you. I look at all like the greats that invested and they all do the same thing. It's just different companies, different way, different era, or generation, but like they all do it the same way. There's no tricks to it. You just gotta do what they do and you'll probably be all right. So anyway, so mentally, you need to stay mentally tough. This was one of the hardest things for me when I first started investing, like especially starting in 2018, I started diving in a little bit to investing, but not taking it serious. I didn't see the potential. And then 2019, I started taking it serious. And then we rolled into COVID and then we had the global shutdown in early 2020. And honestly, I just saw a really good opportunity, but I didn't have so much money invested in the market. It didn't scare me because I didn't have that much of my wealth in there still. So, but if I was about to retire, or I didn't think that was going to happen, I could see how mentally you'd be freaking out because if you guys remember, there were, the news was saying, oh, well, we might have a global lockdown for 3 years. Like that was like things that people were saying on the news. Like, that's scary. I don't think hopefully we never go through that again, but that's like once in 100-year, event, maybe a lifetime event for us. So mentally you got to stay tough. And, that's something that you have to train your mind. Like even now, like we're seeing inflation headlines dating back to 1981. That's like way before I was born. So, so people haven't seen this since, most young investors haven't seen this ever. So you got to stay mentally tough and see the big picture. Like, do I think we're going to get through this? Do I think inflation will go back, to under 3.5% eventually? Absolutely. Do you think we'll get through this? Absolutely. Do I think a recession will happen one day? Absolutely. It's inevitable. We always have recessions every decade or 12 years. We're definitely due for one. This is setting up for one. But every single time we've had a recession, we've always gone back to all-time highs, in the coming years after coming out of it. And half the time during recessions, we actually have good S&P returns or market returns. So the headlines freak you out. You gotta understand. And my opinion is, if you're scared, you gotta do more research. If you get scared, do more research. If you're like, I think the market's gonna crash, right? Or I think we're going to a recession. Okay, well, maybe you should do more research before you do any decisions in your account, like sell, keep, buy. And if you're weary about something, do more research. And when you know everything, when you feel like you know most things that are going on, you don't get as scared. If you don't get as scared, you probably won't do anything silly, because a lot of times people panic sell, and then the market shoots up and you're like, oh shoot, like I should have just probably stayed in. Now I regret it. Now I'm going to wait, and the market runs. And then you're like, well, shit, this is stupid. And now I'm going to wait for the bottom. People could be waiting for a recession for late this year or 2023. But what if it doesn't happen? Then you're just wasted a whole year and a half of investing. Like, it's silly. So you got to stay mentally tough is basically the moral story there. So stay mentally tough. You have to stay consistent. So that's my first really year in investing. I was kind of willy-nilly in and out. But you want to stay consistent. So what I do is every paycheck I get from my day job, I put in X amount of money, no matter what. Like if I have more bills one month or, a paycheck has less bills than the other, no matter what, I put in the same percentage every time I get paid, no matter what's going on. If my mortgage is due, doesn't matter. If I have bills for anything else or went on a vacation and got to pay for those vacation bills, doesn't matter. No matter what, I'm putting X amount of dollars in my investing account always. That is like so important, because that way, when the markets beat down like this, it gives you a position of, power, because you always have cash coming in and then you could take advantage of the deals. If the market runs up like crazy, okay, well, what you want to do is maybe if things start getting overvalued, because that will happen one day again. It absolutely will. Like these 4 PEs will get just so ridiculous and things will be so overvalued it won't make sense. It literally won't make sense. So when it gets to that point, you still put in the money every paycheck, right? This is what I do. We'll just keep stacking cash in your account, cash in your account, cash in your account. Next thing you know, you're gonna have this whole bag of money here. And then when the market corrects going down to like fair value, okay, start using some of it. If it goes down below value like we're at right now, plow it all in. And you just rinse, repeat. You just do the same thing. So that's why, like, in my opinion, just because I'm younger, I'm not retiring, I'm in very high growth stocks. I'm in value stocks. I'm really not in any, I should be in some like banks and stuff like that, but I'm not. I'm not really in any, values or any dividend stocks. Like I'm not. I know I should be, but I'm not. So, it's kind of one of those things where, once you start doing it and you get a taste of it, it gets addicting. Or at least it got me addicted. So, you see the opportunity, and yeah, it's really shitty when now I have a ton of money in the market, and we've corrected, most of my accounts are down from like highs. They're down 30 to like 75%. Most of my stocks, like if I bought at the peak in early January, which I was doing because I was buying all in December, if I just quit and did nothing and didn't average cost down, didn't buy, just quit, I'd be down 30 to 75% on all my positions right now from when I bought at the peak. So that would just be silly because you're not taking advantage. If you were buying it then and you like the valuation, which I did, why aren't you buying it now when it's 75% off basically where you're buying it? That's how you got to think. So you just need to, you just got to stay consistent. Compound interest is a beast, and I don't know why, schools or people or parents or whatever, they don't teach this. Like compound interest is the key to financial success, in my opinion. Like you're only one person. You can only do so much in a day with your time. You have to make your dollars work for you, right? So your hundreds will turn into dollars. So every $100 you put in the market, they generate little ones, like $1 bills. And the next thing you know, you have a whole army of hundreds, and then you have a whole, country of ones. That's how you got to look at it. So if you work, you're just getting the hundreds and you're doing nothing with it. And then you're fighting inflation every year. So I don't think there's ever been a time in US history where the dollar has deflated. So I wouldn't get your hopes up if you have a bunch of cash in an account and you do nothing with it all the time. You're literally just losing money, essentially. If you like obviously 3, 6, or 9 months worth of bills, that's fine. Keep that in cash. It's a security blanket. But anything more than that, you're literally just wasting money. You're losing money for free. So that's how I look at it. So this is part 2 to investing opportunity. I don't know if you guys like this stuff, but this is kind of my mindset, why I invest and all this. So obviously it's the weekend, the market's closed, and it will be opening Monday. So I might make another video tomorrow on basically like what I'm really looking to buy this week. There are so many good stocks that are so beat down right now. My Fibonacci retracement on the SPY and QQQ, we're at like the 23, 25% level. I don't think it's personally bearing anything crazy. I don't think it's going any lower. It's not going to go back to that 0 fib line, I don't think, which would be like the 420 in the SPY, and I think the 380 or 320, whatever. It was something, I know it was 420 in the SPY. So I usually go off the SPY. So that's all I got. Till tomorrow, make sure you guys like, subscribe, comment below. Peace.